Ladies and gentlemen, welcome back to Vietnam stock market opportunities. I'm so happy and grateful to all of you guys to follow our channel. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram Vietnamstockmarket.entry. The phone number is +849143265556. Or you can scan the QR code on the screen so that we can support you. Or you can follow and subscribe the other channel is Areca Capital channel. The owner of this YouTube channel is Areca Hồng Nguyen. She is a personal financial advisor and a capital stock broker manager. With the phone number is +4914326556. With the email home.nguyen@vcsc.com.vn. We always welcome you to our office on the 11th floor, 119 Nung Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today I would like to introduce you to our enterprise, that is MSN, Masan Group. Masan Group specializes in consumer businesses that span FMCG retailing and the meat value chain. New initiatives are aimed towards a customer tech ecosystem with telecom and fintech products. Other businesses include metal-based materials and an associate stake in Techcombank. On the 14th October 2022, the current price of Masan Group is 79,000 Vietnam dong, with the target price is 139,000 Vietnam dong. And this is the report which was collected by Viet Capital Securities on the August the 31st, 2022. Masan Group with the industry is consumer, with the current price is 114,500 Vietnam dong, with the target price is 139,000 Vietnam dong. Consumer retail business points to rise after 2022. We lowered our target price for MSN by 11%. But reiterate our buy rating. We lower target price is primarily driven by 1. A lower valuation for Masan consumer holdings. That is deprived from our 8% lower projected aggregated EBIT earnings before interest and taxes for MCH in 2022 to 2024 forwards. 2. Higher net debt due to a lower cash balance. And 3, increasing our risk-free rate and cost of equity assumptions by 50 basis points. They are partly offset by a higher contributions from Phúc Long Heritage PL to total equity value as a result of Masan Group rising its equity ownership in PL to 85% from 51%. We maintain bullish from the outlook for MSN's leading and wide-ranging consumers businesses to benefit from Vietnam's long-term consumption growth. However, we believe the prolonged impact from COVID-19 and the recent inflation prices of FMCG goods on consumer spending power will undermine sales volumes and hurt margins of MSN's consumer businesses in 2022. Potential upside catalysts. Successful scale-up of technology application backed by trusting social, further ownership reductions in Masan high-tech materials, value create M&A. Key risks to our positive view. An effective store expansion at Win Commerce and PL. Ineffective product innovation and marketing that would lead to a significant slowdown in MCH growth. We believe MCH will experience lower growth in 2022, but resume double-digit growth in the following years. Pronouncing IQ Vietnam's FMCG consumption value growth was low single digits year-over-year in H1 2022. Additionally, growth in H2 2022 will be challenged by a high base in H2 2021 due to consumer stocking up essential goods during nationwide social distancing measures. Against that backdrop, we cut our aggregate 2022 to 2024 forward revenue forecast for MCH by 9%. However, we continue to expect strong growth in the energy drink and processed meat categories along with MCH while sustaining gross margin around 40% to support MCH earnings in 2022. Starting from 2023, we expect convenience foods to regain a mid-teen growth trajectory. We believe MCH strong core competences and product R&D, marketing, and distribution will enable to deliver a 20% net profits after tax amount compound annual growth rate in 2022-2024 forward. We expect store expansions and gross margin improvements for WCM in 2022% forward to 2024 forward, which is offset by a lower forecasted contribution from PL as WCM has 20% of revenue shared from PL. We project MSN will add 1,000 new Winmart Plus stores in 2022, 2023, 2024. Additionally, we increase our gross margin assumption for WCM by 190 basis points to 23.3%, 24.2%, 25.2% in 2022, 2023, 2024 due to, firstly, higher bargaining power. Secondly, lower wastage thanks to more effective product assortment. And thirdly, increased sales from private labels. Nevertheless, these factors are substantially offset by our 33% downside revision in PL's aggregate 2022 to 2024 forwards EBRT, and 2, raising our SG&A per revenue assumption for WCM in 2022. Now we move to the part named H1 2022. Profitably improved by consumer business slowed. Net revenue in H1 2021 is 33,018. In H1 2022 is 36,023. Year-over-year is 9%. MCH in H1 2021 is 11,476. H1 2022 is 12,359. Year of year is 8%. VCSC comments, mainly driven by processed meat, coffee, and beer, which increased 57.8%, 33.1%, and 19.3% year of year respectively. Meanwhile, revenue from seasonings and convenience foods only increased 2.1% year of year and 6.9% year of year in H1 2022 and declined 2.6% and 17.4% year of year in Q2 2022 respectively. Home personal care value declined 4.0% year of year in H1 2022. WCM LFL revenue of Winmart Plus declined 10% year of year, while Winmart's revenue fell 6% year of year. We probably attribute the decline in Winmart Plus to the high base in May to June 2021 due to a surge in demand from consumers stocking up on goods amidst social distancing restrictions. Store counts of Winmart and Winmart Plus were 127 and 2,873 as of Q2 2022 compared to 122 and 2,619 at year-end 2021 respectively. Masan Group acquired a controlling stake in Phúc January 2022. Masan Meats like mainly dragged down by the drop in pig farm revenue that was primarily due to lower pork prices. MHT driven by rising commodity prices and strong demand for tungsten. MCH EBITDA earnings before interest, taxes, depreciation, and amortization margins advanced 80 basis points year after year to 23.1%, as gross margins improved 60 basis points. Meanwhile, SG&A per revenue dropped 70 basis points. WCM's EBITDA margin improved by 2.2% in H1 2022 from 2.1% in H1 2021, which was backed by further improvements in total commercial margins, TCM, and gross margin due to negotiations with suppliers and most optimization, store operations and logistics, as well as a more effective product assortment and targeted promotions. MML EBITDA earnings before interest, taxes, depreciation, and amortization margin was minus 2.5% compared to 7% in H1 2021 on a LFL basis due to lower pork prices and rising animal feed prices. The margin slightly improved Q of Q as it was 2022 was minus 3% in Q1 2022. In order to improve its margin, MML plans to 1. increase the availability of MML's product through the growth of WCM's network and other channels, while also two, improving the utilization rate of processing facilities. MHT, earnings before interest, taxes, depreciation, and amortization, EBITDA margin improved to 22.4% in H1 2022 from 19.6% in H1 2021. TCB's contribution. Please see our earnings flash. TBC lower provisions offset lower bond-related income dated July the 21st, 2022 for more details. Others. Overhead expenses at the whole call level and other items. Now, next to the part is 2022 forward modest outlook for consumer businesses and HT to Stein revenue in H1 in 2021 is 88,629. In old 2022 forward is 89,561. New 2022 forward is 83,560. New 2022 forward year-over-year is -6%. VCXC comments on new 2022 forward. Revenue growth 13% year-over-year on a LFL basis. MCH, we cut our sales forecast for most categorized notably seasonings and convenient foods by low per mid-teen rates, as this categorized tracked behind our previous expectation, with the exception of beverage and processed meat. We expect MCH revenue to be driven by energy drinks plus 25% year-over-year and processed meat plus 50% year-over-year. WCM, we decrease our forecast for SSSG of Winmart Plus to turn negative, but maintain our low single digits SSSG assumptions for Winmart supermarkets. Meanwhile, we maintain our projection that Winmart Plus Winmart store count will be 3,299 per 127 by year end 2022 from 2,619 per 122 as of year end 2021. Footlong, we expect Footlong will add 7 full concept stores, compared to 100 in our previous forecast, and 400 kiosks located inside Winmart Plus, compared to our previous forecast of 1,000, as we expect Masan Group will slow rollout of Footlong in order to build and optimize operational efficiency of existing stores. MML, no more contributions from the feeds business. Sales advanced 7% year-over-year on an LFL basis. We continue to cut our sales projection for the entire integrated meat portfolio. pork and chicken. As H1 2022 results track behind our expectation, we expect MML's revenue to be encouraged by distribution expansion, especially via WCM's store network. MHT, mainly aided by higher realized selling prices for tungsten and fluorspar, as well as a bigger contribution from copper as MHT is working with domestic copper smelters to offload its copper stock into intercompany adjustment and others. Elimination of intercompany transactions between MCH, MML, and WCM. Earnings before interest and taxes, EBIT, in 2021 is 6,283. In 2022 forward, old is 7,371. 2022 forward, new is 5,419. And 2022 forward, new year of year is minus 14%. BCIC comments on new 2022 forward is EBIT increases 3% on an LFL basis. WCM, we expect WCM's EBIT to turn negative from our previous positive expectation, mainly due to one, our increase in WCM's SG&A sales assumption as we expect upcoming aggressive store expansion to be accompanied by escalated rent and salary expenses. Sales amid our expectation for WCM's lower LFL sales and our continued downward revisions in Footlong's EBIT, which is partly offset by our upward revision for gross margin by 160 basis points to 23.3%. Footlong, due to our increase in SG&A sales, MML, we expect MML's EBIT to turn negative from our previous positive expectation, mainly due to, firstly, our cut in gross profit margins of the pork business, and secondly, our upward revision in SG&A sales for the entire integrated meat portfolio, pork and chicken, as these numbers tracked behind our previous expectation. H&T, thanks to operating leverage, a large portions of gains from selling price increase will flow straight to the bottom line. Associate profits, share profits primarily from TCB. Please see our update reports TCB revision of corporate bond regulation cash shadow dated August the 5th, 2022 for more details. MCH, we believe MCH will experience slower growth in 2022, but resume double-digit growth in the following years. In H1 2022, Vietnam has approached some of the highest rates of inflation in 2 years across key FMCG categories, resulting in shoppers trading down their product choices. According to Kantar World Panel, per Nelson IQ, Vietnam's FMCG value consumption experienced mid-single-digit year-over-year growth in H1 2022 that was mostly driven by an increase in unit value growth, while volume remained stagnant. Additionally, customers stocking consumers stocking up essential goods amid nationwide social distancing measures in H2 2021 created a challenge for growth in H2 2022. Against that backdrop, we cut our aggregate 2022 to 2024 forward revenue forecast for MCH by 9%, which is mostly derived from our downward revisions in sales of seasonings and convenient foods in 2022 to negative low single-digit year-over-year growth from high single-digit rates. However, we still expect strong growth from energy drinks and processed meat to support MCH sales in 2022. Furthermore, we believe MCH is a business that has a solid shield against inflation and commodity price, as its gross margin has remained around 40% thanks to its wide-ranging and diversified product portfolio. We expect MCH gross margin to improve by the high season of H2 2022, which should offer an opportunity for MCH to increase selling prices. Starting from 2023, in addition to the continued acceleration in emerging categories like energy drinks, home personal care, and processed meat, we expect convenient foods to regain mid-teen growth traction, as we believe downtrading will subside and the sales of premium convenient products, home meal replacements will rebound. We believe MCH's strong core competencies and product R&D, marketing, and distribution will enable it to deliver a 17% revenue compound annual growth rate and 20% net profits after tax MI compound annual growth rate in 2022 to 2024 forward. WCM 2022 forwards to 2024 forwards performance will be driven by store expansion and gross margin improvement, which is offset by a lower forecast contribution from Footlong as WCM has 20% of revenue share from Footlong. We maintain our projection that Masan will add 680 new mini-mart stores in 2022 and 1,000 each in 2023 and 2024. Additionally, we raise a WCM's gross margin assumption by 106 basis points to 23.3% following WCM's resilient gross margin improvement in H1 2022. We believe GPM could expand by additional 100 basis points in each of 2023 forwards and 2024 forwards due to 1. Higher bargaining power thanks to a larger store network, 2. lower wastage thanks to more effective product assortment, and three, in increased sales from private labels. Nevertheless, these factors are primarily offset by one, our 33% reduction in footlong aggregate 2022-2024 forwards. EBRT compares to our previous expectation in two, increasing our SG&A sales assumption for WCM and 2022, as we believe its aggressive store expansion will be accompanied by accelerated salary and rent expenses, while sales per store will take more time to ramp up. Regarding footlong, we cut our year-end 2022 footlong kiosk store count assumption to 1,000 from 1,600 previously, as we expect the Masan Group will slow the rollout of footlong kiosks in order to build and optimize the operational efficiency of existing kiosks, which is due to lower than expectation average sales per day for kiosks in H1 2022 as customer traffic returned to flagship formats. When activities normalize from COVID-19 disruptions and consumers no longer found the current menu at kiosks favorable. We also increase our SG&A sales assumption for footlong in 2022 to 2024 forward, which was tracked ahead our expectation in H1 2022 per our estimates. As a result, our aggregate 2022 to 2024 forwards EBRT projection for WCM is 39% lower than our previous forecast. We believe the story of footlong now relies on flagship stores, which have demonstrated strong margins, gross margins of 70% and net margins of 35% in which H1 2022, and have accounted for 67% of footlong's revenue while recording like-for-like. LFL stores are stores that open before 2021 and care operating. Revenue per store growth of 19% year-over-year in H1 2022. We expect flagship stores to be a key driver of footlong top and bottom line growth in 2022 to 2024 forward, with 70, 100, 100 new stores in 2022, 2023, 2024. Furthermore, on August the 1st, 2022, the Shepa Company Limited, a direct subsidiary of Masan Group, required 10.8 million ordinary shares of footlong, equivalent to a 34% equity interest of footlong for a total consideration of 3,680 million Vietnam dong, 157 million US dollar. This transactions raised Masan Group's equity interest in footlong to 85% from 51%. MML, we believe popularizing the consumption of chilled meat will require longer time and heavier interest. in investment than with expectation. As chilled meat is normally priced 15% to 20% higher than traditional warm meats, but has not yet offered a clear-cut value proposition that can convince consumer to switch from traditional warm meat. Vietnamese consumers still hesitate to add it to their shopping carts, especially amidst downtrading efforts. As such, we delay our assumption of MML's EBIT break-even point to 2024 from 2022. That said, we forecast MML integrated meat revenue will record 2021 to 2024 forward compound annual growth rate of 22%, which is supported by distribution expansion with WCM's retail network. We believe there could be potential upside to our forecast if MML can expand its processed meat portfolio and Asian distribution model faster than expected. We forecast MHT and TCB to primarily drive Masan's earnings growth in 2022, while we cut our EBIT projections for all customer retail business. We believe MHT's 12% year-over-year higher average selling price, especially for tungsten and fluorostar, to increase MHT's revenue by 18% year-over-year in 2022, thanks to operating leverage. A large portions of the gains from selling price increases will flow straight to MHT's bottom line, which leads to our projection for a 79% year-over-year growth in MHT's 2022 forwards EBIT. In addition, we estimate MHT's EBITDA margin will step from 25% in 2021 to 27% in 2022. Regarding TCB, our in-house forecast for 20% year-over-year growth in net profits after tax MR is mainly driven by a 23% year-over-year increase in net interest income that is backed by our in-house assumption for a high loan growth this year, to a 17% year-over-year increase in NFI, include FX trading following strong bank sales, and 43% year-over-year decrease in provision expenses that results from our in-house expectation for reversal for additional provision expenses for restructured loans. Please see our update reports, TCB revision of corporate bond regulations cost shadow, date August the 5th, 2022 for more details. And now I will show you the valuation. Let's take a look. We maintain our sum parts valuation approach for MSN. In this update report, we cut our target price by 11%, which is primarily attributed to, firstly, Our lower valuation for MCH, that is derived from aggregate decreases in MCH EBIT projection for 2022 to 2024 forward by 8%. And secondly, higher net debt due to a lower cash balance. And thirdly, increasing our risk-free rates and therefore our cost of equity assumption by 50 basis points, which are partly offset by the increased contribution from Phúc Long, the total equity value as a result of Masan Group raising its equity interest in Phúc Long to 85% on August the 1st, 2022 from 51% as previously. Figure 4. VCSC's sum of parts valuation for Masan Group. Recommendation history. Historical VCSC target price compares to share price. Actual price, target price. This is the actual price, the target price. Financial statements. And okay, that's it. These are all information we want to share with you. Thanks for your follow and listening. See you next time. Bye. Like and subscribe our channel.